Hello, hello. Good afternoon again. Hey, Zoran, how are you doing? Thanks for being one of the first to join us. Again, as usual, if you can hear me all right, you can see me okay, let me know. Hey, Lam and Katia, how are you doing? Thank you again, Zoran. Good stuff. So we'll give it a minute or two before we get started. Today we are going through the trade management part 2 of 4, break-evens and partial profit placements. So it's quite an important topic, quite an interesting topic as well. I think not a lot of people will share with you a bit of a different way that we look at it. So look forward to that. Again, as usual, as I go through the slides for today, please make sure if you have any questions at any point in time, feel free to type it away, ask the question. Don't wait for me to stop before you jump on. Ask it away and I'll be happy to guide you through that. How are you all doing today? I hope you're doing well. Hey, Alan, how are you doing? All right. One more minute and we'll start. For those of you who have turned up early, thank you. And then we'll wait for everyone else to jump on. A couple more people jump on, and then we shall get started. Markets have been a little bit quiet yesterday. Well, a bit of a retrace yesterday, quite a consolidation today. So it has been a little bit quiet. It looks like it's setting up for quite an interesting move later into the week. So watch out for that if you're trading later into the week. With that, let's get started. All right. So again, welcome everyone. Today is trade management part 2 of 4, break-evens and partial profit placements. Very important in terms of your overall trade setups, your trade journey. So I'll be sharing with you how to consider when to put a break-even level or move your stop loss to a break-even level, and when to consider, closing out partial profits during a trade while it runs. Hey, Yemoa, how are you doing? All right. So let's get started. As usual, before any sessions, quick disclaimer. Any information, context, or opinions we can express in the presentation and in the following slides are solely those of the presenter, not necessarily those of Vantage, and are solely used for educational purposes, as they do not constitute investment advice and or consultation on how a client should trade. All right, so basically it is going to be educational in material, or educational in purpose. If you do jump onto any trades, make sure you do your own due diligence. Make sure you check your leverage, check your trade size, check your margins before you jump on any trades, and also your own analysis. All right, so we can't be responsible for any potential profits or losses that you might be making. So make sure you trade well and trade safe. With that, many things to cover through today, a lot of things to cover through today. Well, we'll be sharing with you the anatomy of a trade, right? What to consider when you're in a trade. Just do a quick recap on the previous session on take profit and stop loss placements. Again, just a quick recap on that. And then I'll share with you the idea of a break-even definition, where to put your stop loss, or when to consider moving your stop loss when you're in a trade towards a break-even level. And then also some possible ideas on a partial profit placement, right? When to consider taking partial profits. I see a few new names here. So if you are joining me for the first time or the first couple of times, please feel free to ask any questions as I go through the material. All right, don't wait for me to stop or to take a pause. Just ask away. I will be happy to answer your questions as we go through the information. All right. So introducing the team here, I'm sure you all know Desmond, and a few of you have joined onto this session before. So my name is Jin Dao. Most people call me Jin, or almost everyone calls me Jin. I'm one of the prop traders here. So I have been trading for a long time now. I've managed funds professionally, and I'll be here to share with you, some thoughts, some ideas on how I approach the markets, how I consider some trades, and in this case for today, consider stop loss placements, take profit placements, moving to break even levels. So if you have any questions, I'll be happy to share with you my journey, share with you my experience, and also to try and guide you through your trading journey as well. Okay. Moving on. The anatomy of a trade. Okay, so I've broken it up into two parts here, and you can see that there is the entry. Most of the time when everyone considers, they look at it as the entry. Let me see whether I can get my, okay, there we go. Right, most of the time people only consider this three things here on the left, right? They only look at entry. They sit there, and retail traders that I've coached over the years, all they think about is, where am I going to get into a trade? How can I get into a trade? Which is the best place to get into a trade? Then after they think about getting into a trade, if I'm lucky, or if most people start thinking about where to put a stop loss, and then more importantly, they will always think about, where's my profit going to be? And what we usually see is that in terms of importance, entry level, everyone focuses on entry so much, they kind of forget about stop loss, and then they overestimate on profit, right? So usually we see an entry level and then a big take profit, and then stop loss, they'll just find somewhere below that point to have their stop loss level. But if you consider it, what I want to put towards you now is to consider a few more other points, right? It's not just about entry. It's not just about stop loss. It's not just about take profit. You want to consider a possible break-even level. Okay, a possible break-even level. That means when you get into a trade, at which point do you want to secure that trade? Right, secure that trade either in terms of not losing money, right, or making a little bit of profits while securing the trade, so that if it turns against you, at least you're not going to hit your stop loss in a big negative result. Okay, so that's a break even. Partial profit, right? Partial profits means as it moves up, when to take some profit off the table, secure some profits while we try and maximize on the trade, right? So we try and maximize on the trade, on part of the trade, as we take off some of the profits. A trailing stop, right? Trailing stop will come in where we start thinking about how to move your stop loss. As the price moves up, your stop loss continues to shift towards the upside, so that in the event price has a big retrace, your trade will still be secure because the stop loss moves according to price moving higher or lower in this case. And lastly, idea invalidation. When you have considered, you've done all the analysis, you've put in the possible trade idea, or you put in a pending order, or you're setting your levels, thinking about when to enter the trade. When do you consider it as invalid? When you cancel that idea and say, hey, wait, it's possibly not going to happen anymore. I'm not going to hold on to that trade, or I'm not going to hold on to the analysis. I'm going to, cancel or invalidate that idea and move on to look for something else. Okay, so this is what most people consider, right? What I want you to start thinking about when you start looking at your trades, or when you start entering into trades, is all of that: the break even, the partial profits, the trailing stops, and the idea invalidation. And we'll guide you through all of that through this series of trade anatomy and also the trade management. Okay, so I see a few more of you who have just jumped onto the session. So welcome again. If you have any questions, please feel free to ask it away in the chat if you're joining us on YouTube, ask it in the chat there. If you're joining us on Zoom, then ask it into the chat as well. Okay, so anatomy of a trade, common on this side, on the left side, and what additional things I want you to think about on the right side there. Just a quick recap, right? Just a quick recap in terms of a TP. TP, we call it take profit. Stop loss, we call it SL, right? In terms of the TP SL placements. Remember that whenever you trade, one of the first things I do, right? That's pretty much the second thing I do. For me, I look at the economics first, and then the next thing I consider is the trend, and then I look at the stop loss, or I look at the support and resistance level. So you always want to make sure that with your charts, you want to identify the major resistance or support levels. This could be support level and a resistance levels there. All right. So you want to identify those levels before you enter in trade. And then after that, you want to make sure that if you have a stop loss, your stop loss is always going to be beyond a resistance level, right? Beyond a resistance level. Your take profit will be before the resistance or the support level. All right. What I mean is that why you want to have your stop loss beyond a resistance level is because as price climbs up, you have protection. There is a protection to your stop loss because price is likely to hit that resistance level, and we don't expect resistance or support levels to break, right? You don't expect the floor to break. You don't expect the ceiling to break. So you don't expect your resistance or support levels to break. So it provides a bit of a protection to your stop loss. So what we usually have it is right above, just slightly above that resistance level, so that price could come up, hit that level, and turn down, protecting your stop loss. And in terms of take profit, you don't want it below. You don't want it below that support level because price could come down, hit, and bounce back up. You wouldn't hit your take profit there. Okay, so what you actually want to see is your take profit above that support level so that price can come down, hit that take profit before possibly bouncing back up again. Okay, so just a quick recap again. Remember, take profit levels has to be before a support level or before a resistance level. So in this case, your take profit here would be at this level before the resistance. This would be your take profit, right? If you're selling it, then your stop loss would be here, or if you're buying it, your stop loss would be here, below that support level. So stop loss beyond, take profit before. Just remember that quick couple of lines there. All right. I see a question there. New or inexperienced one to trade, often feel trade idea invalidated, but for experienced one, how come such a situation happens to he or she? But for experienced one, how come such a situation? I think that when you start considering a trade invalidation or trade idea invalidation, you might want to have reasons, have actually specific reasons on why you would invalidate that idea, right? And this happens as you analyze or as you consider before you even enter that trade. You want to say, hey, if this happens, for example, in this case, if price, I'll just clean this out a little bit, so it's a bit neater to see. Right, I'll clean all of that out. Right, so in this example, if price were, if you're thinking that we were looking to sell, right, or we were looking to sell down from this point, but actually price breaks towards the upside, then you'd say, okay, trade idea invalidated because price has broken above my resistance level. This resistance level now forms as a support. So have reasons, have clear reasons why you would, invalidate the idea, or you will consider the idea invalidated. That might help you with preventing a frequent invalidation of your idea, having clear reasons why you would enter a trade or why you would not enter a trade, instead of making it a emotional decision. All right, I see some comments on YouTube there. Just want to take a moment to thank you guys for these sessions. You're most welcome there, Reveal. Since joining, I've learned so much and I've been applying it to my trading, seeing the results. Fantastic. We really closed our trades, made 343 on the day, which is 4 times the salary. Fantastic. Long and short on the gold with 0.45 lot size. We did talk about gold very recently, so I'm glad you got some benefit out of that. Fantastic. I hope you're trading well, trading safe, and keep it going. All right. It is a journey. Trading is a journey. So keep it going, keep tuning in. Make sure you let me know if I can help you in any other way. All right. So coming back to the slides here, that was the take profit, stop loss placements. Just a quick recap there. I hope it's quite clear to you guys. Coming back to now the break even definition. Right? What is break even? When do you consider break even? Right? Break even is at a point at which your trade neither makes or loses money. All right. That means, let's say, for example, we are at that point, you've bought at that point, and price has gone up. Right? Your stop loss initially was at that point there, was below your buying price. You would move your stop loss just right to that entry level, right? Entry level, where price at which you have entered the trading position, just so that, hey, if price comes back down and hits your stop loss, what will be the result? Your result will be 0, right? You wouldn't have lost money. You wouldn't have made money. That's what we call a break even, right? That's at the level at which the risk on the trade is recovered, right? No risk on that trade. I traditionally, would look at break even as a good level to enter, but what I would actually tweak to that is that while you consider a break even level, you might even want to consider a small profit, right? So again, drawing this is if you have bought at that point and price goes up, you could either put it at break even there, or you could just put it a little bit above break even level. So in the worst case, if price does turn back down and hit your stop loss level, you could actually see some level of profit, whether it's tiny at $1 or whether it's depending on your trade size, it could be $10, whatever the amount. At least you have seen some results on your trade there. All right. So break even, again, break even definition is at a point where your trade neither makes nor loses money. All right. It's a very good way to trade. At least you're not losing money on that trade. I always feel that any trade you don't lose money is a good trade. Obviously, a trade that you make money will be a better one. Break-even definition is also a price at which you would have entered, moving stop loss to a price where you entered, and then also the risk on where the trade is recovered. The only thing I would say about break-even is to be mindful of commission, swap, and other fees, or your break-even to close. Correct. Exactly the point. That's also why I'll put that stop loss level here slightly higher from that entry point, just so that you would cover any potential trading cost in terms of commission, swaps, and spread, possible spread or other fees, depending on what you're trading on. Okay, so good point there. Thank you for sharing that. So you can either look at it if it's a short-term trade at 0 after spreads and commissions, or slightly higher from the entry point just to cover the cost of trading. So when we start thinking about break-evens, you want to consider when to place it to break even. Sometimes if you move the trade or you move the stop loss too early, right? If you move the stop loss too early, that could actually cost you a very good trade. It could actually cost you a very good trade. Why I say so is because if you don't give price of, that price doesn't move in a straight line. It's going to zigzag, right? That it's going to go up and zigzag around before moving higher. So you want to give it a bit of space to move up and then have a reason to move your stop loss towards break even or towards slightly higher than break even, right? So points where you want to start considering when to move price or move your stop loss higher. Some things to think about. identify where is your possible consideration for break-even level. Okay, in this case, you notice that if we're looking at a trade, you notice that this is a possible resistance level, right? A swing high resistance level. You would say, okay, that's a point of consideration, right? A point where you realize that we could actually see, hey, if price hits that level, we might see it turn back down. We might see it struggle to break higher. If it does turn down from this point, or it could turn down from this point, I want to cap. I want to limit my losses. I want to secure my trade. So you want to identify which levels to consider before you move, or as price moves towards, you want to consider when to apply that break-even idea, right? So in this case, in this example here, we know that we have a level there, then you see price moving up, moving down again, moving up, moving down again, forming another small resistance there. And as price breaks towards the upside, breaks out of that short-term resistance level, we're going to consider an entry, right? In this example, we consider an entry as it breaks above that resistance level. And then in this case, you would have, hey, I would have my stop loss here, I have my take profit, possibly a lot higher. You know, this would be a terrible trade, big stop loss, small profit. So you might consider maybe a take profit a bit higher. But you see price zigzagging along this area. You see price zigzagging here. Once it comes up to this point, which you already would have identified as the point here where you consider moving your stop loss towards a break even, right? You consider moving your stop loss towards a break even because it looks like price might struggle to break above that point. So part 3 will be you move your stop loss from here, move it up towards the break-even point, or as we were talking about before, a little bit more than break-even, just so that if price does turn down, you have break-even or some small profits. You see that price comes down, tries to break higher, false breakout, turns back in, and you get stopped out. But in this case, being stopped out is not a bad idea or not a bad thing, because you would have either had a break even or secured some small profits. So your modified stop loss would have prevented you from that big loss, right? If you kept your stop loss there, it would have dropped, hit your stop loss level, big loss there. So this is one way. What I've always seen a lot of retail traders suffer from is they have small profits, right? Small profits. Pardon my scribble. And then they have big loss, right? Why do they have small profits and big losses? Because whenever they see price push up, they're quick to close out. They're looking to say, oh, wait, because it's struggling to break, I'm going to close out small, right? Close out small profit. But in the situations where they struggle or they didn't watch the charts and they were not looking, it shoots down and hits their big stop loss level. So they end up with small profits and big losses. If you start considering or start looking at your trades and applying a break-even mentality to it, that gives you the chance to actually reverse this around, right? Why so? Is because once you enter the trade, let me just clean it up a little bit so it's easier to see. Right, clean that up. There we go. Once you have entered a trade there, right, and it struggles to break, once it struggles to break that resistance, you move your stop loss higher, you've pretty much secured that trade. You've pretty much secured that trade. In the worst case, it comes down, you would have a small profit. In the best case, it could go up, hit your take profit level, whether it's here or higher up if you have 1-to-1 risk reward ratio. And then in this case, you would have a big profit and then a small stop loss, right? Or small loss. So this is a way that you can actually start applying, start getting more confident with your trades, because you know that, hey, in the worst case, you're not going to lose money. You're going to break even. You're going to make small profits. In the best case, price does break above that resistance level, climbs strongly towards the upside. You're going to have that big take profit there. So this is quite crucial with applying to your trades. It helps you trade with possibly a little bit less emotions because you're not so worried over a trade, and also lets you eventually trade with a lot more confidence as well. Okay, so that's the break-even placements. What I want to show you as well is some examples. I'll show you an example here, and I'll walk through this example with you. In this case, you can see that price has dropped. It's found a bit of a support there, right? It's found a bit of a support there, and it spiked back up again. Okay, but now with price dropping down, I'm sure we can do our analysis. We know that there's a bit of a downward channel. It's come down, it's approaching of that level again. You're looking for an entry, a buy entry in this case, right? You're looking for a buy entry in this case, expecting price to come down, hit, and bounce towards the upside. How it look like? You get a buy entry there. You have a take profit towards that near-term high. Right? See any questions? Nope. Okay. Is it near-term high? You have your stop loss at the near term or the next immediate level there. All right. So this is also crucial to note here that that stop loss level there is also because can't draw a straight line, but you can see that at that point is where the support level is going to be, right? The support line is going to be, and that's why we have the stop loss just beyond that stop loss level. Okay, so if I could draw this right across, you can see that stop loss is just beyond that support level, and take that out again. You can see that at this point, that would be your resistance level. All right, that's your support. That's your resistance. And that's why we have the take profit level just before the resistance level, just so that what we're anticipating here is for price to come down, bounced off, move towards that resistance, and hit the take profit level. Okay, so that's the idea. That's what we're looking for in terms of this example and this trade example here. What happens is that we actually see price come down, expecting it to bounce towards the upside. Points to consider as well is that, oops, you can see, I'll take that away. You can see that there's some levels of a bounce here, a bounce here, a bit of a consolidation at this level. And that's why we have put this as a, let me try to do a straight line there, just to be fair. That's why we've considered this as a possible point of consideration, right? You might want to consider a partial profit. You might think that price is going to hesitate at that level, consolidate at that level, might struggle to break higher from that point. That's why we have this level here. It could also identify it with your Fibonacci levels to build that confluence and to build that confidence of where we could see price hesitating or consolidating at. So how does this trade play out? What we see is it comes down, it hits our entry. So we did buy in, it comes up towards that partial profit level. Several things you could do. You could be looking to close out part of that trade, could be looking to close out part of the trade, or you could be looking to move that stop loss up. Right, move that stop loss up to that break-even level, right? Up to that break-even level. So in this case, you see we've just moved stop loss, and it's just a bit messy now in terms of the chart because we're just using this as an example. But you can see we've moved stop loss up towards that entry level. because price has climbed up towards that partial profit level. We're not sure whether it's going to continue moving up or whether it's going to hit and then turn back down again. As an example, obviously what we knew was going to happen, or what we saw was going to happen, is that price hit that level and turn straight back down, right? Turn straight back down again. So very important to identify several things here is to identify that partial profit level or the hesitation level, and then so that you know when to move, either move your stop loss up or to close out a partial profit. Because in this case, if you didn't move that stop loss up, right? If you didn't move that stop loss up, you would have come down and hit your stop loss at that point. Again, big loss instead of at that level, a small, a break-even trade, small profit trade, or possibly closing out some of the trade at that partial profit level. Okay, so any questions so far? You guys have been unusually a little bit quiet. So any questions so far? Let me just see. If you have a question, type it up. Not just yet. All right. Good stuff. Okay, so, right. So again, just a quick recap, because I talked about partial profits there. What you're going to consider when you're looking at partial profits, again, is when we start looking at, those levels. We start looking at those levels, possible test, right? Possible test. You're not sure whether price is going to break towards the upside, whether it's going to turn back down again. So you're going to start thinking about that point. You're going to start thinking about that point on whether, on whether you're going to move the stop loss higher, right? Or to close out part of that trade. All right, so I'm just checking again, looking at some questions. It's interestingly quite a simple idea, but not something that a lot of people would consider or have been applying, because I don't know why, everyone wants to fix, the idea of having a fixed stop loss comes into play, but you do want to consider to secure your trade at a break even or a small profit, and just so that in the off chance, if that does go up, you could actually see, you secure your trade while you see price move towards the upside. Any questions at this point? If not, what I'll also do is I would discard that. What I also do is I'll jump onto some trades, not jump to some trades. I'll jump into the charts to just show you some examples, some possible examples of how we could see or could move prices in terms of a setup, move our stop losses in terms of a setup. All right. So let me just bring up my charts. Okay. Got messy charts here. Okay, so actually, let's clear that out. This is the DXY. You don't normally trade on the DXY, but let's say that in this case, identifying these points as an example of how to or when to consider moving your stop loss towards next levels is here. If we look at the DXY, right, looking at an entry level here, right, let's say that, okay, if price breaks below 108, below that 108 level, we could be looking to sell it down. What you would typically do is to say, okay, I would say I would short, I'll have my stop loss up there, I'll have my take profit down there, right? No, that would be terrible. Let's say I have a stop loss there and take profit down there. Okay, or you have to take profit towards this point there. But at this point, what you have to consider is those levels. Can I look at Bitcoin shortly after. I will, Razak, so just hang on there. I'm not supposed to be, I wasn't planning to do trade analysis, but because you asked, I will do that. No worries. Okay, so this would be a typical trade setup, looking to sell it down. Support or resistance level there, we could actually consider that as a support. Price breaks below support, look to sell it down towards that next key level there. So that would be my stop loss and take profit. But what we want to consider is that point where you might do a partial profit, or you might shift your stop loss lower, or to protect the trade, which would be about that point there. All right, you can see that price failed to break higher over the last couple of times it reached that level. So you want to say that, okay, if price comes down, in this case, it comes down, it trades lower, your sell gets activated, and it bounces around here, zigzag around. Right, once it comes to that point, you might want to consider moving stop loss to break even. Right, moving stop loss to break even, just so that if it bounces off from this point, go back up, you have secured your trade at break even. Or if it bounces around and it breaks lower, then you could see price trade down towards your take profit level. Okay, so there's one example there on using just a chart on the dollar index to show you a possible levels of partial profits where you want to close out partial trades or move your stop loss towards a break-even level. Okay, I'll do that as well on Bitcoin there. Okay, so some thoughts as an analysis, because Razak asked, I would say that you can see a bit of a trend line pushing towards the downside. We did see it break that 20,000 level very briefly over the last couple of days yesterday. Right now, approaching that trend line, that downward trend line again. At this point, I would say that we might see it test and reject that level. Okay, again, because we have another point at that level there, about 20,800. So we might see it test and reject that level to turn down. All right. So in terms of our ideas of a stop loss and take profit and break even points, what I would consider is that if price tests and rejects of that level, right? So I'm anticipating possible move up, test, and then a rejection towards the downside. Then I'll be looking for a selling opportunity about that resistance, just below that resistance level. Stop loss, again, remember, beyond the resistance. Take profit. In this case, we have a level there and also a low point at about 19,500. Take profit just before that before that support level. So I would be looking at that trade on Bitcoin H4 time frame, testing that trend line, rejecting, turning down, stop loss above that resistance level, take profit level just before that support. Again, as we talked about the partial profits and when to consider moving your stop loss towards break even or small profit, if price thus turn down and trade lower towards this point, right, towards that 20,000 level again. If it turns down and trades towards that 20,000 level again, then I would say, okay, because it's turned down and because at that point we saw that consolidation, we saw that break up, and then we saw a bit of a resistance to turn down here as well, I would, once it comes down to that point, move my stop loss to break even. Right, I'll move my stop loss to break even just so that if it bounces back up, I got my trade secured. Or if it breaks lower, then I have my take profit even better again. Okay. At that point, you can also consider taking partial profits. Partial profits means that, let's say you entered on one standard lot to sell down, then you could be looking to close out half of the trade, just so that you minimize your risk on that trade. You've already secured some profits. If it goes lower, you got profit on half that trade. If it bounces back up, at least you've closed off half the trade on a full profit at that 20,000 level. Okay, so I hope I answered your question there, Razak, in terms of Bitcoin, and also just giving you guys another example on how to move your stop loss towards break even, when to consider to move your stop loss towards break even, and also a partial profit level. Just one more example. I'll give you one or two more examples here. Let's look. I was looking at the Aussie yen just before this session. All right, so I was looking at the Aussie yen just before this session. At this point right now, no, that would be a terrible idea. Okay, no, okay, let's look at that. I'll clear out the charts. Let's look at Aussie yen. You can identify a key level there up at, oops, move that away. Almost that 96.88 level towards upside, right? You can identify a support, an interim support level there at 95.74. Okay, so we see that pushing towards upside there on the Aussie yen. What you would most likely consider is, hey, can I buy this towards upside? At this point, you'll be looking to enter a long. Let's see, enter there. Take profit there. Stop loss just below. Let me just change this a bit. Okay. Okay, let me just make this a little bit smaller because it's taking up too much. Okay. All right, so you see that moving towards upside. They expect it to move towards upside towards that next resistance level. But what you would actually have to consider is that you can see that at this point, price has bounced quite a bit at this level. So you're going to consider a possible profit or partial profit level there. Okay, so you would say, this is my trade. If price goes up, hits that level, you might see it turn back down again. At that point, I want to move my stop loss towards break even, just so that if it does turn back down from there, I've secured my trade. If not, then we can actually see it push significantly towards the upside. Okay, a few questions here. Do you mostly use pending or market orders? It really depends. When I'm sitting there and I'm watching the charts, I do use market orders, so immediate executions, because I'm watching it. I'm looking at possible quick trades, so I'll get in because I can see how it's moving and how it closes. I do use pending when I've done my analysis and I'm unable to watch the charts. For example, if I was analyzing a trade and then I had to jump on a session here with you awesome people, just so that, then I'll put in a pending order, just so that if it does move, I could catch that quick trade as well. So I do have a mix of pending and market orders. And then, is there any specific indicator to get the direction of the trend, or the uptrend or the downtrend of the trade? No, I wouldn't use any specific indicators to say. What you can actually do is to start considering doing trend lines, right? So if it's clear and obvious, you can actually start looking at doing trend lines. In this case, like, oops, where's my trend line? There you go. Okay, you just do that line up. It shows you a clear upward move just making a little bit more visual that, there's an upward move. The main thing, the one other way to consider upward or downward trend is not so much what it tells you or what it's not telling you, right? So we can actually see here that we saw this push towards the upside. We saw this big push towards the upside as well. We saw this push towards the upside as well. We are always drawing upward trend lines. So it actually shows you that, hey, overall, we are looking at a big push towards the upside. In this case, on the Aussie yen, I wouldn't be looking for medium or longer term selling opportunities because every trend line that I'm drawing is upwards. Okay, so a lot of times I see that retail traders will be looking at, struggling a little bit to identify a trend. What I would say is look for it to see where is it pointing to in the most often situation. If it's all pointing towards upside, then hey, you know what not to do. It's not so much about, it's easy to tell you what to do when you know what not to do. So I'm not looking to sell, it's pushing up, I'm looking for that buying opportunity. Once it breaks the level, I'm looking for buying opportunity again. So I hope I answered your question there, Zoran, in terms of the market orders, and also Suten in terms of the uptrend or downtrend. Don't use not so much indicators, but more about that trend line. What I tend to do as well is zoom it out a little bit, just to get the overall view of where prices are moving to. Right. So one other reason why you might struggle a little bit in terms of identifying a trend is when you have it too zoomed in. When you have it too zoomed in without that trend line there, you might think that price seems to be moving right across or is zigzagging a lot. You might not be able to identify a trend too easily if it's too zoomed in. So zoom it out, get a broad view of the market, might help with identifying trend. All right. Do you mostly focus on trading one pair or multiple? What I'll tell you is that what I actually have, I have a screen on. I look at 8 pairs. So my screen would have sections of 8 pairs at a time. So I'll look at all 8. I will try and identify a trade on, I'll go through the 8 pairs or 9 pairs over and over again. Those are the 8 major ones. So I have the dollar index, I have the US yen, the Aussie dollar, the Kiwi dollar, the Euro dollar, the pound dollar, the US CAD, and the Swiss franc up on the charts. The main ones that I keep my eyes focused on. And then once I finish looking at that, I'll look through the other pairs as well. So I don't focus on just one pair. I do look at multiples because it's about trade selection. It's about looking for which one's going to move faster, which one's going to move towards which one's going to set up nicer. So you get a trade selection as you get more exposure. All right, there, Razak. So I do look at multiple pairs to try and find that correlation, to try and find the possible trades or preference of trades between the pairs. Okay, so let's look at one more example here. The euro dollar, right? Euro dollar has been moving quite interestingly, right? Analysis I did before, I was expecting it to come up towards that almost 1.01 level to turn down. Okay, so clearing it out again. Let's see what happens if price at this point does climb up towards 1.01 or 1.009 and turn down. Okay, then you would be looking for, that you have a key support level there. A key support level there at about 0.99, right? A key support level there. So you'll be looking for a trade in this case, as an example, to sell down from 1.009. Your stop loss will be beyond that resistance level, about 30 pips. Your take profit could be towards the next support level, that 0.99 support level, at about 150 pips towards the downside. Right? Great trade setup there, especially if price does climb up, hit that resistance and turn down, similar to what happened here on the 26th. Big 150 pip towards the downside. So we're looking for this potential move, hit and turn down. Okay. Things to consider or points to consider is at this parity or just slightly above parity level of 1.0028, right? We've seen that it's failed to break above a bit, it's failed to break above at those points, had a big tail there. We saw it being supported a little bit there. So what you could be looking for is that if price does turn down, come towards that point, right? Price does turn down and comes towards that point. That would be the level that you start thinking, if it hits this level and bounces back up, I don't want to be losing 30 pips, right? I don't want to have possibly made, how many pips was that? Let me see. Have possibly made 40 pips, but didn't close out the trade and it goes up and hits my stop loss to lose 30. That would be losing 40 pips of profit together with 30 pips of a stop loss. That'd be a 70 pip swing, terrible, painful setup to be had. So if price does come down towards that 1.0029 level, that'll be where I move my stop loss towards break even, right? Just to secure that trade so that if it does bounce back up, at least worst case, I've lost a 40 pip profit, potential profit of 40 pips, right? You could close out half that trade, partial profit placements. You could close out half that trade, or you could just move stop loss, close out half that trade, and then see what happens at that support level. If it does break lower, then we could see price trade down towards that point. All right. How can you be confident of a support that can serve more than just support established by an intraday support situation, rather looking at the daily, weekly time frame analysis? Okay, so support levels, support and resistance levels, because we're looking at this on the H4 time frame, typically I keep my trades relatively either within intraday or over a couple of days. So it depends on how long you hold on to a trade for. What I find is that most retail traders would hold on to a trade for not a very long time, right? Short to medium term trades. So identifying support and resistance levels on the H4 time frame should give you a realistic take profit level, a realistic stop loss level. Okay. The flip side is that if you did go into the daily time frame, right, if you went to a daily time frame, then you'd be looking at key levels, which are, all right, just simple key levels here, which would be very significant, big swings in terms of key levels. And if you did miss that bounce towards the upside, let's say that if you wanted to get in at that point, then anticipating a bounce back up towards 1.037, your take profit could be very nice, about 300 pips towards the upside, but your stop loss would be about 150 pips towards the downside. Okay, could still be a good setup. Depends on how you prefer to trade. But what I find is that at 150 pip stop loss, what happens with a lot of retail traders will be the need to size down, because not everyone trades with a huge trading account. So what happens is you need to size down, and size down quite significantly, because it's a 150 pip stop loss there. So it becomes to the point where you size down so much that even if it does go up, and if it does go up, then you might not see the full potential in terms of your trade size, right? The full potential of the profit in terms of because of your trade size. But let's say that with this setup pushing up, if it does push towards the upside, then a point of partial profit or point of consideration will be at about 1.011, right? About 1.011, because you'll be looking to buy it up. Price might climb. Oops. Price might climb up, hit that level, and possibly could turn back down again. So what you want to consider is that if you did enter that trade, if it goes up towards 1.011, then I would move my stop loss towards break even, slightly more than break even, just so that I'm testing that resistance level. If it does break above, we could see it climb, possibly climb towards 1.037. I think that's another level, about 1.026 as another hesitation level, right? So there's a few hesitation levels there on the bigger time frame. So it depends on what you're comfortable with, how long you want to hold on to a trade for. I think if you hold on, if you have trades mostly within the day or within a couple of days, not more than a week long, then I would say I'll identify trades or identify support levels and resistance levels on the H4 time frame rather than on a daily and a weekly. It does tend to line up, right? Your levels could tend to line up even if you do locate on the daily and on the H4 time frame. I think weekly is way too wide. So if you have to, locate on the daily, but could do the H4 as well. I wouldn't do lines. I wouldn't do support and resistance lines or key support and resistance lines below the H4. I wouldn't look at it on H1. I'll stay on H4. Then on the H1, you could be looking at possible interim levels, possible hesitation levels rather than key support or resistance levels. All right. I hope I got your answer there, Trung. Okay, so good example there on the euro dollar for it to possibly push up. Can I talk slightly about the scalping strategy? I've got 3 minutes to go through scalping. It wouldn't do scalping justice to go through that in 3 minutes. What I would say within a 3-minute period to talk about scalping is to I would scalp only when it's high volatility in a trending scenario, right? High volatility in a trending scenario. So if I went to let's look at an H1 time frame in this case. So that kind of scenario, right? That kind of scenario would be a scalping scenario because we can see it trading towards the downside, but you're not sure when price is going to stop and reverse, right? It could stop and reverse like what it did here at about that point, bouncing back up, or it could stop and reverse at that point, bouncing back up. So in this scenario, towards that downside, I'll be looking to scalp it. Okay, so a lot of times I find that traders would look to scalp just because they want to scalp, but it becomes a bit of a, trying to make trades when market is not moving, right? In this case, for example, like today, right? Like today, right, just before this hour or this couple of hours, if you try to scalp during this period, then there is movements, but it's not going to be clear or enough movements to try and take a trade. So I would say scalp when there's a clear direction and volatility. All right, I hope I answered the question there, Sutan. And Trung, sure, just go ahead. What's the question you have? The last question before we call an end to the session. I will feedback and try and do a scalping strategy session one day. How can you react in order when it's an extreme volatility time going against your trend expectation? Okay, so easy answer to that. If I'm expecting price to drop, right? If I'm expecting price to drop and price actually goes up, what I would do is not trade, right? I wouldn't trade If it goes against, yeah, like news, right? If I'm reading the news, or I've done my analysis before the news and I'm expecting price to drop, but it goes up instead, then I wouldn't be entering any trade. I wouldn't react. I wouldn't try and sell it down as it moves, because it's going exactly against what I expected. In this case, what happened here, that move down was fully expected. This was during the Jackson Hole event, as it pushed towards the downside, as the rather accepting the not entering a trade. Right? If you do and have a trade entered and it does hit your stop loss, let the trade, it would have hit your stop loss, closed out. Don't try and rush into a trade, because what could very well have happened is that it goes against you but reverses back again once you enter the trade. So if it goes against your analysis, that's an idea where you want to invalidate the trade, close out, leave it for the next time. Don't rush into a trade again. Okay. So I hope I answered all your questions there. I hope you had a good session today. Please let me know if it's been informational, it's been good help with your trading journey so far. And with that, make sure you trade well, trade safe, start thinking about putting in a break-even levels, partial profit levels, start applying that to the strategy, and I'm sure you'll start seeing some possible good results with your trades. With that said, trade well, trade safe, and bye-bye now. Take care. See ya.